All right, so let's start by focusing on running the SP500 and monthly CRSP files. Whichever one you want to begin with is fine, but maybe start with the monthly CRSP file. First, you'll need to open the file and split it by permno. Now, you don't have to run everything all at once. Maybe spread this out over the semester to make it more manageable. Once you start getting some results, take the time to go through them and really look at what's coming out. Then you can start thinking about how you want to package everything up. For example, you might decide to provide the entire CRSP file for daily data, the whole CRSP file for monthly data, and the SP500 file for weekly data. Keep in mind, though, that this is a lot of valuable data. The CRSP subscription alone costs $100,000 a year, and the SP500 file, which I got from an industry friend, is worth $20,000. So yeah, this is no small thing. Now, the program I built in Mathematica with my advisor wasn't cheap either. Let me give you some background here. I spent 4 years as an undergraduate finance student, then went through an MBA program, and after a year of searching, I found my PhD program. That's a lot of time invested. My technical analysis foundation came from countless conversations, weekends sacrificed, and a lot of grind during my early 20s. All of that really paid off when I was in my asset pricing and other finance courses during my PhD. When my advisor suggested combining digital image processing with machine learning, I jumped on it. I proposed modeling the paper by Lowe, Mameski, and Wang, 2000, which was handed to me by my old student fund advisor from Northern Michigan University. He told me that this paper was groundbreaking. It introduced technical analysis to academic literature. From that point on, there was no argument about the legitimacy of technical analysis. That paper became the framework for applying image processing and machine learning. I started by replicating a basic machine learning program, smoothing data in a fixed window, and using observations around the current data point. Then I found an R package program to help replicate technical patterns, rebuilt it in Mathematica, and created every underlying function. This became the foundation of my dissertation, where I processed 30 stocks on the Dow Jones. It took forever. 2 to 3 weeks running simultaneously on 3 computers. After successfully defending my dissertation in May 2019, right before my 30th birthday, I spent the summer rerunning the program using the entire CRSP database. My advisor then engineered an improvement using a C++ compiler, which took the process from 30 stocks in weeks to 30,000 stocks. That's the technology I'm sharing in the intermediate course. The goal is to break down how to use it, provide a sample data set, and extend the process to a real-time data-driven application. This application will detect patterns on real data in real time, producing results similar to our program. For example, top patterns show a significant drop after completion, and bottom patterns show a significant price improvement. The idea is to create a standalone application that overlays existing trading platforms. So, if you're trading futures on an intraday 2 to 5 minute basis, you might want to know if a double bottom just completed on the 1-hour chart. That would signal prices are likely to rise over the next hour. Then you'd look for confirming signals on a 2 or 5 minute chart, maybe an engulfing pattern or a rounding bottom, as covered in the Day Trader Intermediate course. Or you could combine technical systems like MACD, RSI, and ADX from the intermediate trading course. The goal is to pinpoint high probability signals by layering time frame analysis with technical patterns. If you're confident prices will rise over the next hour, you could take an options or futures contract, adding leverage while minimizing risk. You'd confirm the pattern breaks to the upside before taking a position. The same process applies to intraday trading watch lists like NVIDIA stock or indices like the NASDAQ, QQQ. You'd identify patterns, confirm them, and combine them with what you already know about technical trading. If you're not ready for this yet, start with the beginner or intermediate courses. Once you're comfortable, move to the intermediate technical stock price course to fully understand the process. Then jump into the advanced program to get your process running in real time and take your trading to the next level. For longer-term investing, you can apply this to weekly or monthly prices. Look for top patterns to buy put options or bottom patterns to anticipate price increases. Combine these patterns with technical trading knowledge from the intermediate course and use longer-term charts for high-level signals. For example, if you spot a monthly top on a stock, whether it's from all available data, a sector-specific application, or an index like the SP500, you can anticipate a drop. Then you'd confirm the drop with intermediate-term signals or candlestick patterns and pinpoint the timing with shorter time frames. Decide whether to sell immediately or manage profits over time using predefined stops or time-based exits. This approach removes the guesswork from subjective chart patterns, giving you a mechanical, statistical edge. It ties everything together, refining your process and helping you confidently take action